Well, the street is so used to seeing multiple upgrades coming in after every quarter for Ultratech Cement, the entire cement space. There have been positive surprises in the past many quarters, but we've been constantly highlighting the fact that cost inflation is something that a lot of commodity players are grappling with. In fact, coal, petcoke prices have been on an upswing since past many quarters. And while these prices are actually reflected in the company earnings after a lag, in this particular quarter, you have seen a certain amount of price inflation that is being reflected in the P&L as far as Ultratech Cement is concerned. These prices continue to rise, and in the coming quarters, you may see a further impact of rising coal and petcoke prices as far as the P&L of most of the cement companies are concerned. What is it that brokerages are saying? Well, most of the brokerages are highlighting the fact that the company is very well placed in the entire demand cycle. Company is seeing significant amount of demand coming in from infrastructure space, a revival of demand from the individual home buyer, and also the rural demand is something that is auguring quite well. East India, actually in the past quarter, due to floods and heavy rains, saw a dip in demand, but the rest of Indian markets actually saw good demand offtake, with demand coming in as well as volume offtakes coming in line with what the street was anticipating in the quarter gone by. What is it that brokerages are saying? CLSA has maintained a buy stance on the stock, target at 8,300 rupees a share. They're saying that the Q2 EBITDA was largely in line, and the company sounded confident of passing on cost inflation pressures. The cost pressure will most likely accentuate in the second half of the year, and Ultratech Cement, however, is confident of passing it on. Capacity expansion of the company is largely on track, and the debt has risen marginally. The company is very well placed as far as the current cycle is concerned. Price hikes are key to overall outperformance. What is it that CITI is saying? CITI has maintained a buy stance, target at 8,500 a share. They're saying that cost pressures were witnessed in Q1, more to come, but this can be offset with multiple price hikes. Q2 volumes up 6.5%, which is a sequential dip of close to 1%. Now, when you're talking about companies' ability to pass on price hikes or pass on cost inflation, our company is likely to hike prices in FY22 to cover cost inflation. Management expects the power to fuel cost to be higher by almost 200 rupees a ton in third quarter. Ultratech continues to maintain the absolute fixed cost amount at FY20 levels. MACQUARIE too has maintained its Outperform rating, target at 8,542 a share. They're saying that the strong demand and margin is what were the key things to focus on in the quarter gone by. Full impact of input cost inflation will be reflected over Q4. Ultratech will take price hikes to offset cost inflation, retaining the Outperform rating with the target price largely unchanged, as there haven't been too many upgrades or too many EPS changes post this particular quarter.